today, and I think I'll be joined by a group of leaders in the financial sector. But first of all, I think the UAE-China investment corridor has been a highlight for 2 years. So I would like to give a very short, quick introduction to let you know about what is happening in the market, and then I will share some of the insights, and delighted to hear from our distinguished guest speakers. So quick glance on China. What is China? An economy of 17.8 trillion GDP last year, and by the 3 quarters of this year, it has grown by 4.6%. Given the speed and the size of the community, it is still the fastest growth economy in the world. And China is one of the largest export nations globally, with 3.5 trillion total export value last year. If we look at the capital markets, it's also a very sizable and fast-growing capital markets, standing at 21 trillion total public equity market capitalization of Greater China, and accounting for around 27% the weights in the MSCI Emerging Markets Index. So China represents many opportunities for you to invest in diverse asset classes. On the equity side, there are over 10,000 listed companies in Greater China, different stock exchanges, with a total trading transaction volume of 33.8 trillion US dollar YTD this year. And thanks to the Stock Connect, the northbound represents around 3.4 trillion transactions among the total equities. And bonds has been a steady growing and healthy sector for all the investors to tap into China growth as well. So the total outstanding bond value of China is around 23.7 trillion US dollars. If you look at the outstanding value as well as the new issuance of the year, both indicators have been growing around 10% year over year. And funds is another interesting sector which we will hear more from our speakers. But YTD, the AUM of the total funds has increased by around 16% this year, with over 12,000 funds listed and also accessible by the markets. Private market, we're optimistic to see a lot of momentums coming back to its peak by 2019. So a little bit more on the secondary equity markets. If we look at the major 3 indices of the mainland China stock markets, there are 2 cycles over the past 10 years, but YTD this year, the market has been up by around 12 to 13%. And on the right-hand side, the different sectors have varied performances. The financial sector is the high-performing sector, led by insurance, multi-finance, banking, as well as the technology and semiconductors. The other lagging sectors are the consumers and healthcare and pharmaceuticals, which we think we will see some positive signals to be delivered in the coming years. The bond market, as I said, has been fast and steady growth over the past 10 years. And right now, China represents the 2nd largest global bond market to the world, presenting significant financing opportunities for the government as well as for corporates. On the fund market, the market this year, we still see over 1,000 new funds listing, with a total AUM of around 4.4 trillion US dollars. But ETF, passive investment, has been a very interesting and fast-growing investment vehicle for a lot of international investors. So if we look at the total net assets of the ETF, it's been up by 76% this year. A lot of that primarily thanks to the new stimulus policies, a series of rounds of stimulus policies post-September. That's why you will see that the average trading volume in October and November monthly achieved 72 billion, over 100% growth higher than the previous 9 months average. And also, the stock and ETF connects definitely creates a lot of opportunities for international investors to tap into the overall growth. There are over 200 funds are listed and included in the northbound, and northbound accounts for around 30% of the total transaction volume of the total ETFs got traded in China. So a little bit on the private sectors. MENA investors are historically been very experienced in investing in China private sectors, and we're glad to see that there is increasing demands and capital and deal flows coming and sort of resuming in post-COVID, and we're hitting the record high by closing to 2019. So with that, I will be very delighted to welcome our panelists for the session. We will have speakers from the private sectors, from public sectors, as well as from the banking sectors to give us more of the highlights and insights of the market. Okay, thank you. I think the MC has already introduced our panelists and background, so I'll start straight away. So we'll probably start with Grant, because you're the capital of the capital. So Mubadala represents one of the earliest sovereign wealth funds with diverse experience in investing in China private sectors. And you're also still very positive and bullish about the long-term investment. So can you share with us a little bit more about your China investment plan, as well as what are the positives and key trends and sectors that you're capturing right now?
Absolutely, and thank you, Cassie, for hosting this panel today. So I think it's important to outline our history in terms of China. And so Mubadala, we've been investing through a dedicated China investment program for almost a decade now. So we established in 2015 a $4 billion sovereign partnership between Mubadala and China Development Bank Capital, CDBC. And initially, we were looking to use that vehicle to gain market entry into China. And so we made a number of fund commitments initially, built out our portfolio of GP on-the-ground partners, including Carl and his firm. And then over time, we started to make co-investments with those partners, and made investments and direct investments in 2018, 19 into names such as Meituan, JD Health. It was a period where there was the internet economy was booming. A lot of new economy companies were coming through, and so we were making out a lot of minority growth investments initially. And then by 2021, 22, for us to evolve and move to the next level, we made a decision to open a local office in Beijing, and today we now have 30 people across investment, legal, tax, support services as well. So fast forward to where we are today, and we're now focusing more on buyout opportunities across healthcare, consumer, industrial, and business services, which is aligned with our global mandate. And so as we look forward, we're still finding high-quality companies where we can have a significant impact and leverage not only our global network, but also our history of building businesses and working with partners to create value.
Great, thanks for sharing. I think that is definitely very, very optimistic on this long-term view. And I will move to Carl, given that your close partner relationship and Hill House has been one of the leading asset managers globally, managing a lot of the capitals, as well as working with the partners like the sovereign wealth funds. So can you share with us your experience on how you work with the partners to capitalize on the opportunities to invest in China?
Sure, thank you very much, and it's a pleasure to be here. As Grant had mentioned, we work extensively with many of our capital partners here in the UAE as a multi-strategy, multi-asset class GP based in Asia. Our strategies span public equities, private equity, venture capital, credit, and real assets. And historically, we've invested tremendously into Asia with a focus partly in China, and it's one that continues to be very compelling as an investment opportunity for us. I would say a few things make this case quite compelling. The first is really the valuations that you see in today's capital markets. If you look at MSCI China, the average PE is roughly 10 to 11 times, and that compares quite favorably with S&P 500, which is roughly 30 times. There you have the opportunity to really invest in some of the leading companies across China at very, very attractive valuations. Next, I think the other investment theme that we look after is really investing behind innovation. So for many, many decades since the opening of China's economy, it has been very much a global for China or China for China. But if you look at China's innovation today, more than 3 million STEM graduates are produced in China annually. That's more than number 3 through number 10 in all the countries in the rest of the world. You see the amount of innovation that is really coming out of China, that you have an opportunity to really back and build alongside the best entrepreneurs in that part of the region. That's something that we've been proud to be investors behind together with our partners from the region. And I think the third thematic that we tend to see is that there's been a coming of age of Chinese companies. So for many, many years, the Chinese companies were very much domestically focused. You have a 1.4 billion people population, 18 trillion GDP. For years, it's been a penetration story. But now you start to see many of the leading companies start to be outward focused. They start to become much more global. And there we have been, as international investors and together with our partners from the region, we've been fortunate to really help with a lot of these companies to go global. And that's been a big opportunity for us as well. So all in all, the investment case for China is still very much alive, and this is something that we continue to be excited about.
Great. I think there's a lot going on. There's globalization, deglobalization, polycentric trends that happening around the world. So I'm going to touch a little bit on the macro, on the public market side, and turn to Chaoping. So you, as the market global strategist for JP Morgan Asset Management, I'm sure that you got this question a lot, particularly recently, about how would you advise your clients on global asset allocation, given the overall economic conditions happening globally, and what are the specific opportunities that you see between UAE and China, and the mitigants that you would advise your clients as well?
Yes. So in this year, our basic assumption for the global economy is that a soft landing is still on track, and the U.S. monetary policy will be continuing for the easing cycle. But the challenge is that there are increasing geopolitical challenges, particularly for China from the end of the tariff and the trade barriers. But for China, we also see some promising prospect in our policies. Yesterday, Chinese Politburo Bureau, the top policy-making entity, just announced that in the new year, there will be more stimulus package, and they will help to stabilize the domestic growth. So against this background, I would say we remain optimistic about the investment opportunities in China, but we are also providing some advices to our clients to further diversify. So I think Middle East might be a target for Chinese investors to diversify their global investment. As a global asset manager, JP Morgan is always trying to help the global investors to invest in China. And at the same time, we help Chinese investors to invest in the global assets. So I think that's quite similar to the mission of Abu Dhabi, the capital for capital and the hub for global fund flows. And during this period of the rising uncertainties, I think diversification is critical for investors, both globally and for Chinese domestics. And at the same time, we would also advise our clients to stay invested in the theme for innovation and technology, because in the future world, I think the global economic growth is mainly driven by innovation. And from both China and the global market, we can see more and more targets or investment destinations for us to invest in the technology. For example, in China, we still see huge potential in the areas of AI, of the robotics, and the manufacturing automation. And I think for UAE investors, China is also providing such opportunities there.
Okay, great. And now we're going to turn to Dr. Hong Rui. So Shanghai Pudong Development Bank represents Hong Kong in a lot of transactions, IPOs, follow-ons, debt issuance, M&As, etc. So, and also Hong Kong is the gateway for global investors to tap into the opportunities in China. So what's your advice on how global investors might find the opportunities in Hong Kong and mainland China attractive, and what role can you play there?
Okay, thanks, Casey. As we know, Hong Kong capital market is the most active and sophisticated market of the world. Especially Hong Kong's IPO is a very important hub in the world for the consequently ranking among the top international financial center. Hong Kong IPO market in 2024 has shown resilience and growth, especially the successful launching of Rouge 18A regime announced for the biotechnology company in 2018. We are also seeing a notable increase in listing of technology, especially the innovative high-tech company listing in Hong Kong and 2024, which the Hong Kong Stock Exchange has become the most go-to platform for Chinese high-tech company, especially for the mainland China to enter the capital market. So we outlook for 2025 is positive, with expectation of a continued rebound and increased activity. I also want to add that there is a great number of listed companies having high yield dividend return, which are undervalued. So I believe that to be one of the opportunity for investors. So how international investors, especially UAE investors, can participate Hong Kong capital market. Investors can leverage this opportunity through direct or indirect channels, but also can through strategic partnership with Hong Kong-based company or financial institution to gain insight and access to investment opportunity. Thank you.
Great. I think Hong Kong market definitely showed resilience this year as we welcomed a couple of large IPOs and secondary listings in the main market. So Chaoping, coming back to the public side on the ETF side, we know that ETF has been making tremendous progress this year. And JP Morgan, as the asset management firm, have been in China for more than 20 years, and the fund manages over 100 products in the market. So what's your view on the thematic investment opportunities? What sectors and kinds of products would you advise your clients?
Yes. So just following our previous discussion, I think innovation and technology is the most cutting-edge opportunity in China. I think in the area of AI, we can see that China might have some advantages in the AI adoption in manufacturing sector. In the US, maybe AI is mostly used in software, in service, but in China, with our large base of manufacturing, it could be used in automation, in auto driver, and in some other more like physical areas. And the second area I would focus is on our healthcare. Actually, China is entering in an aging society, and there's increasing demand for healthcare services. And the third area might be the consumption. In the past few years, we always know that China, there's some cyclical headwinds for consumption in China. But we still believe with appropriate policy reactions, the consumption could go back to the center stage for Chinese development strategy. And in this sector, some leaders might benefit from the new policies. And in the area of ETFs, we see the quick growth in the total amount, and at the same time, there is some structural optimization in our ETF products. In the middle of September, Chinese authority launched the new ETF we call CSI A500, which I believe is more representative to the changing economic structure of China. In our old ETFs, they are mostly focused on the large cap stocks and financial sectors and real estate sectors are more have largest weights there. But in those new ETFs, they become more representative with more components from the technology sectors. And these new ETFs attracted a huge amount of the inflows. In the first months of the launch, the A500 attracted about 150 billion RMB into the market. And we believe there will be more opportunities for global investors to explore in this area.
Great. And we're going to talk about the connections and ties between UAE and China and what role can each of you play, given that you are in the center of the ecosystem. So Grant, so aside from the hat of being an investor and shareholder, how would you impact the UAE and China economy in the corridor, and how would you help your portfolio companies to expand into other markets?
So we've been trying to position ourselves as more than just capital, and so by being a strategic partner with a number of our portfolio companies, we've been looking at ways that we can help open up market access to the region using the UAE as a gateway. And so we have 3 cases, J&T Express, who came into this market a few years ago, Shein, and WeRide as well. And so there were 3 portfolio companies that we've helped to gain market entry into the region. And we, separately to that, we also have a UAE investments platform that is very active, and so we work closely with them to try and help our partners in China to access this part of the world.
Great. And in Carl, same for you. The Hill Houses firm bridging the capital facilitation of these 2 regions, and then how are you looking to build up the linkage and engagement in this corridor?
Yeah, sure. So, traditionally, the link between China and UAE has been a diplomatic one, a trade and commercial one, and from a capital perspective, very much a one-way with a lot of investments from the sovereign wealth partners into China. And very much, as I had mentioned in my prior comments, you start to see the coming of age of a lot of the leading companies in China who are looking at other nodes in their global presence. And a lot of our portfolio companies, whether it's in life science, whether it's in decarbonization, whether it's in manufacturing, whether it's in technology and fintech, are looking actively at setting up their overseas hubs. And the UAE being one that is very much a prominent platform. Really, if you look back in the history of China and the UAE, if you think about the Middle East as a Silk Road in the past linking the East and the West, even now, the UAE is seen as a potential platform for many of our companies to access the rest of the MENA region, the rest of Europe, and further markets from here. So, as a Hill House, as an investor, we want to act as that partner to them. Having been in this region for more than 10 years, having partners who are locally connected, and to us, any sort of partnership is going to be vital. So, and being a shareholder who's value added for our portfolio companies in helping them come to this region has been one of a priority for us.
Great. I heard 2 key words: partnership and connectivity in the ecosystem. These are the 2 things that really matters to boost the tie. And then coming back to you, Dr. Henry, so with a banking background and SPDBI has full licenses in Hong Kong, then how do you find opportunities in UAE attractive to you, and how is the bank going to participate in bridging and enhancing the tie across nations?
Okay, thanks. The UAE-China corridor offers significant opportunity for Chinese company and UAE company. As an investment banking, SPDBI can play a crucial role in the growing economic ties between the 2 countries. I have 2 points to share. The first is with the increase in economic ties, there is a growing demand for M&A. Chinese company looking to expand their business in UAE will require the expert guidance in navigating the regulatory environment and entry strategies. And also we can boosting the investment and joint venture opportunities between the Chinese and Abu Dhabi companies. We expect a great opportunity in fundraising and dual or secondary listing in ADX for the Chinese company, especially the high-tech company. And the secondary would be the asset management. There is a potential for SPDBI to create or raising investment fund focused on the UAE and China. Target sectors such as renewable energy, semiconductor, and AI, and some new infrastructure, and so on. This fund can attract both institutional or individual investors to capitalize on the growth potential. With the goal of being a trusted partner to our client, we would participate and maximize the opportunities by the strategic partnership with and collaboration with UAE financial institutions. And we will increase the local presence in the UAE, can help us to better understand our client and their market, and so on. Thanks.
It's great to hear. And so we are running out of time, but thank you very much for every panel representing the thought leadership from the private sector, the public sector, and banking sectors. And then thank you all for your support and the conviction to building the tie of the two nations. Thank you very much.